It has been a week since 3 Federal Reserve members bucked the group's decision to cut interest rates by 25 basis points. Newly appointed Fed Governor Stephen Miron, well, he voted for a jumbo cut. He wanted 50 basis points chopped off the interest rate. But Kansas City Fed President Jeff Schmid and Chicago Fed President Austan Goolsbee both voted for a pause in rate cuts. Goolsbee specifically noting he wanted more clarity on inflation data before another cut. Well, we just got it. The November Consumer Price Index, as we've been telling you this hour, it showed annual inflation still rising, but at an unexpectedly cooler pace of 2.7% versus an estimated 3.1%, and is heading, as you just heard Rick Rieder of BlackRock say, closer to the Fed's 2% target. Is that enough to sway at least Goolsbee's mindset? He's here. Let's ask him now. He's live from the Federal Reserve Bank of Chicago in a Fox Business exclusive. Austan, this is your first chance exclusively to any media outlet to tell us. You got your answer on inflation, or did you? I don't know. How much oomph do you put into that November number? And if we had a meeting tomorrow, would you vote to cut interest rates?
Well, look, if we had a meeting tomorrow, we'd be in the blackout period, and I couldn't be talking with you. But there's a lot to like in this CPI report, for
Not
sure.
Bad. Well
there's a
played.
lot to like, and if we keep getting reports like this, I realize it's just 1 month, and you never want to hinge too much on a single month, but that was a good month, and if we get clarity that we are in fact headed back to the 2% inflation target. As you know, I've been saying for a year or more, I thought that underlying there, after we could get past this uncertainty, we could get back on that golden path. Rates could come down. If we get stabilized full employment and we're on path to 2%, I would be comfortable with rates being a fair bit below where they are today. I just am uncomfortable front-loading the rate cuts before we're sure that we're actually back headed to 2%. This is a lot to like from this month's report, but we are going to want to see progress in services and progress in a couple of places on a sustained basis.
How concerned are you about what appears to be a little bit more sluggish jobs picture at the moment? And I say that because, yes, we got a 4.4% unemployment rate most recently for last month. And Rick Rieder, I asked him, I said, what would you ask Austan Goolsbee? And he wanted to know, how can you balance inflation and the concerns about that versus the labor market and the worries regarding the slowdown and get rates lower to where they are today?
That's what he asked? Well, yeah. Look, I agree with that in spirit. I mean, he's highlighting when you get into moments where the two sides of the mandate are kind of fighting each other, that's an unusual moment, and there's not an obvious playbook of what you do. I think that most measures of the job market, other than payroll employment, but the rate kind of based measures, the unemployment rate, the vacancy rate, the hiring rate, the layoff rate, those have shown pretty steady, cooling mildly, but fairly steady. And that's why I say if we can get, if I get more assurance like what's in the CPI today, that we're headed back to 2%, I think Rick's observation I have no problem with. I believe rates can go down a fair bit from where they are now, as long as we know we're on path back to 2%, and that what we've seen, these blip-ups in inflation, are not stall-outs. They're not going the wrong way. They're going to truly prove to be transitory.
Okay, so one more. If you got one more CPI December, would that be enough?
It's not an individual report. You also want to look at the components. What we need is some assurance that this thing is transitory. If what you saw, for example, was dramatic improvement on goods, but some escalation of services inflation, given the fact that services inflation historically has proved a lot more persistent, you would be nervous, even regardless what the headline were. if you started to see the components were looking good and the headline was showing going back to 2%, and it really looked like this was going to be a transitory thing that happened from tariffs, but not lasting, you'd feel a lot better about it.
I misspoke. I mean, the inflation rate actually, most recent print was 4.6%, not 4.4%, and that
The unemployment rate was 4.6. Yeah,
correct,
up from
so
4.4.
That is hotter than what was higher than what was expected. So I get that is a little bit disconcerting. But let me bring it to the leadership at the Fed. The president has been very public in his discussion about interviewing people for the new position when it does become available in May when Jay Powell moves out. He said his next Fed chair will believe in lowering interest rates drastically. He complimented Chris Waller, the Fed governor, just in the last 2 hours when Edward Lawrence said, did you have the meeting? And he said, oh, he's great. Chris Waller's great. He also is very positive about Kevin Hassett. We've heard that he told the Wall Street Journal Kevin Warsh is, quote, at the top of the list. But tell me how you envision working with a new Fed chair, because it would be the first management change for you.
Yeah, I imagine all of those names. I've worked with Chris Waller for the last 3 years that I've been at the Fed. I'm a great admirer of his, and he's very capable. I've known both Kevin Hassett and Kevin Warsh for a lot of years. I don't think around the FOMC table, people take the job extremely seriously. Everybody comes to these rate decisions with exactly their brain oriented around the dual mandate. It's all about stabilizing prices, maximizing employment, looking at the economic data, looking at the economic outlook. I don't think that there's going to be any management intrigue in that sense. Everybody comes with a real seriousness of purpose.
President Trump obviously has been mentioning these three names, but he also said there's a fourth. I asked Rick Reeder, and Rick Reeder has been mentioned as one of the possibilities. So this is
I've seen Rick's name.
Yeah.
What did he say?
Well, what do you think he said? He's like, listen, it's an honor to be nominated for this Oscar, for this political Oscar. But
yeah, right.
Of course, he's taking the classy route, and he says, listen, whatever the president decides. But that said, when you talk about, say, for example, the newest Fed governor, which is Stephen Myron, Jay Powell said that in the most recent meeting, it was very, very respectful discussion. Was that true, or were you arguing with Stephen Myron because you were both on opposite sides?
You're going to see. You're going to see when the transcript comes out. It comes out with a lag. You can see from the minutes, and you'll see in the transcript. Like I say, people take the job extremely seriously, and they're coming to the committee from very different backgrounds. You've got some academics, you've got markets people, you've got economists, you've got bankers, you've got business folks. They come to it with different worldviews, but they take the job with the utmost seriousness. And as you look at Governor Myron, he's come from the CEA, where a lot of folks have come to the Fed from the CEA, and he's taken the job very seriously. He's making arguments. He's coming from a different perspective, and I think you'll get to read word for word what the discussion is. It's very civil. It's very informed.
Yeah, but the readout doesn't say that you kind of stuck your foot out and tried to trip him and he jumped on you and punched him.
No, exactly. There's no yelling. There's no yelling in the minutes. But there's not going to be yelling in the transcript either.
Austan, Fed funds futures. This is the market's prediction mechanism about how many rates are going to occur next year. It's showing 2. And right now, when you look at March, that looks like possibly the first of next year. Listen, 26% odds for January, but for March it looks like 58%. So, talk to me about what you think. And you're not a voter next year; you are an alternate.
I thought you were going to say what are you going to say as of March? Look, I don't like tying our hands or tying my hands before the next meeting, much less 2, 3, 4 meetings in a row. I said, and I still believe, and I have remained consistent. My view is that the settling point of rates is a fair bit below where it is today, and that by the end of next year, we can, as long as we are hitting our marks on getting inflation back on path to 2%, I think that it's realistic that rates can come down a fair amount. The farther up to the front you make it, to me, the higher is the standard of which you still got to prove, and we got to be comfortable that we are on path back to 2% inflation.
Austan, a happy holiday to you, and might be a little bit of a relief
and to you, Liz. It's
that
great
you're
to
not a
see you.
full-blown voter, so you don't have to answer questions like that with me, but thank you.